So I generally don't like the word super cycle, but I do think we're in a commodity bull market. I don't really know how to define a bull market versus super cycle, so I just call them bull markets. But it's basically tied to the capex cycle. You have a period of rapid capital expenditure, new sources of energy, new deposits all coming online.
Financial expert Lyn Alden discusses the current economic landscape and the factors driving the commodity bull market. She highlights the shift from negative to positive real rates, despite high debt to GDP ratios and large deficits in the United States. Alden explains the historical context of currency systems and their impact on global markets, emphasizing the challenges posed by digital assets like Bitcoin and stablecoins. She argues that the commodity bull market, especially in energy, is influenced by the capex cycle and fiscal deficits, debunking the misconception that recessions always lead to a decline in commodity prices.
So on one hand, it's return to normalcy. So instead of negative real rates, we're back up to a period of positive real rates based on many factors. The what makes it challenging though is that we're back at positive real rates with much higher debt to GDP ratios and very large deficits in the United States, and that's obviously a challenge. So we've had over the past 30 plus years, there's been a very strong disinflationary trend, globalization, China opening up to the world, followed the Soviet Union, Russia opening to the world. So Western capital, Eastern labor, gas from Russia, all this got kind of interconnected, very disinflationary. That allowed interest rates to keep coming down. But now, and that offset the constant debt to GDP appreciation. So if you double your debt but cut your interest rate in half, your interest expense is still manageable. But what we're seeing now is that things bounced off zero. Now that there's been more fiscal, there's been more inflation. There's less kind of the rate of globalization at the very least is slowed down, and in some areas it's outright reversed. And so now we have higher interest expense on a very, very high debt load. And so for the first time in a very long time, fiscal deficits matter. It affected, basically the UK last year. It resulted in a change of government in many, by the bond market. And now in the United States, we're seeing that just very large amounts of treasuries coming to market. So there's like a supply problem and a repricing. And I think it has long-term consequences. But in some aspects, it's a return to normalcy. So a lot of it comes down to what the world is using as their settlement asset, their reserve asset, basically the world's money. In the older era, gold was the foundation. And then over time, a gold-backed dollar became the next foundation. And then in the modern era, the dollar itself became the foundation, partially linked to oil, but in general, just kind of the network effect. And so in any country, the state has the ability to kind of impose a currency on people up to a point, but in the international realm, you can't necessarily impose your currency on another area, and so state currencies compete in this global sense for network effects, liquidity, capital markets. If you hold those currencies and reserves, what are you going to reinvest it into? For example, is there a deep enough capital market, treasuries, equities, things like that? And so the dollar has this very strong network effect. And I think going forward, the dollar system is getting very stretched. And I think which way we go will depend on a couple key factors. One is that we could see a more multipolar world where you have the dollar on one side and you have the yuan and some of its adjacent currencies on the other side. That's challenging from a network effect standpoint. The other option, and possibly coincident with that, would be gold revaluation, basically central banks turning back more towards gold. And then also, technology now allows money to pierce borders more easily with things like Bitcoin, stable coins. So I think in many cases, countries are going to have a harder time imposing their own little currency bubble on their people because there's more, if like I could send you money over this video call with a QR code, it's that peer to peer now, and that would work for almost any market that has basically an internet connection. And so now it's I think the rise of digital assets, especially neutral open source ones, are yet another challenge. So I think that really the direction of digital assets will affect this because I think they are really taking off, and these other ones are kind of these more analog things that are kind of like the fallback methods, or it's what the powers that be would prefer. And so it's we're kind of watching the Game of Thrones of money right now, which is a couple leading network effects kind of coming to a head in the years and decades ahead. So I generally don't like the word super cycle, but I do think we're in a commodity bull market. I don't really know how to define a bull market versus super cycle, so I just call them bull markets. But it's basically tied to the capex cycle. You have a period of rapid capital expenditure, new sources of energy, new deposits all coming online, and eventually you flood the market with too much. You have some sort of economic slowdown, which hurts demand. Then you kind of enter this long period of oversupply, cheap prices, lack of capex. And going forward, I think that that's turning, and it's really been turning since kind of the pandemic bottoms. And so I do think that we're likely in a multi-year, ups and downs, but a longer term commodity bull market until the prices go up enough that enough new capex comes online and starts the next cycle. So yes, I'm broadly bullish on commodities with different time frames, generally long term, especially centered around energy. So part of it's the supply side. And so, for example, in the dot-com bubble recession, so right after the dot-com bubble, early 2000s, it's not like commodities got killed in that cycle. They just kind of chopped along for a period and then resumed the bull market in the next cycle. So it's not, we during the global financial crisis and then again during the COVID crisis, that's the recency bias that we associate recessions with just commodities get killed. And whereas that actually does not happen in every recession. That happens in some recessions, partially tied to the capex cycle and other factors. The other factor would be the fiscal side. So basically, the way that the Western kind of sovereign debt situation has unfolded, as you bring debt from the private sector up to the public sector, which is the rotation we've seen in recent years, that makes it a lot harder to sustain a recession in kind of real terms because um, when that happens, tax revenues fall, and we're already running in the U.S. $1.7 trillion deficits. So we're already pre-stimulating, and so I think basically we have to go back to the 1940s to find a similar macro environment. That's something I've been kind of pointing out for the past 3, 4 years. And so I think that while there is a risk of demand destruction, slowdowns, things like that, and for example, I've been cyclically not super interested in copper for the past couple of years because of that reason. I was like, okay, I'm bullish long term, but I think we're having a slowdown for a period. Maybe that's ending now. I'm not sure. I've been more bullish on energy. So I do think we have to be somewhat cyclically aware of the risks. But I also think we shouldn't overly focused on the past two recessions with recency bias, and the combination of the capex cycle and the sovereign debt situation, the fiscal deficits, are, I think, overall bullish.
So let's recap. We delved into a comprehensive discussion led by financial expert Lyn Alden, uncovering key insights about the current economic landscape and the ongoing commodity bull market. Alden highlighted the shift from negative to positive real rates, emphasizing the challenges posed by high debt levels and fiscal deficits. She explored the historical context of global currency systems, underscoring the significance of digital assets like Bitcoin and stablecoins in reshaping the financial landscape. Alden's expertise provided valuable perspectives on the complexities of the commodity market, debunking common misconceptions and offering a nuanced understanding of the factors driving the ongoing bull run. As we navigate these intricate economic dynamics, Alden's analysis serves as a guiding light for all viewers seeking clarity in the world of finance. Share your thoughts in the comments section below. Stay tuned for more insightful analyses and expert perspectives on our channel.